one.
We often talk about the market closing on the highs or the lows for the week, or at least establishing a higher low. Well, we don't make guarantees on this show, but I can almost guarantee you we're not going to close on the highs for the week. We got some decent earnings report. We got a pop overnight, but it's fading. Let's talk Amazon, Intel, Enphase, oil stocks. Christian Fromhertz at 8:35. Let's pick it up. It's Friday. It's Premarket Pop.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, welcome traders and investors. Starting this Friday in the green, but not as green as we were before. Steady leak. We're up 5 handles, 41.60, 150. Just dripping down here towards that closing price. The buck is up 15 cents, still holding up at 106.57. The bonds are down a half a point after a decent day yesterday, 109.11, 30 seconds. Crude getting a little pop up, $1.26 at 84.47. Gold trying to clear 2K for good, down 570 at 1991.70. Silver going the same way, under 23, down a nickel, 22.86. Bitcoin holding steady here, up $180 at 34,485. I'm going to bring in Triple D here, and man, Dennis, these rallies just aren't holding. I mean,
they can't hold. I mean, it's just gotten to a point where it's been too easy on the bears. Case in point, we can go to Amazon earnings, and we talked on the closing print about the 125 to 126. I'm like, if it pops up there, it probably sells back off. So on the initial earnings report, which I don't know if you can see it, I don't know which chart I'm going to get. I still have the 4-chart system. I'm just not a fan, but anyways, I'm looking here and trying to see that pre-market.
That's Dennis, what I because I need to change it to the after-hours session. So
okay, gotcha. Okay, so you can see all the chops. So anyways, on the initial number, we popped up to 126. I was like, screw it, 125. So I shorted the stock at 124.95 on the initial number, like guts, like that stuff you should not do. Just fading. I knew it was a beat. I saw the initial number, and I'm like, you know what? This is major resistance, and there's sellers all over the place. I was in that trade, I think, less than 30 seconds, and I covered it back at 120.10. So literally took almost 5 points out of it in about 30 seconds. And then she popped back up, and she has come back. But, I mean, it popped there and gave it all back very, very, very quickly. So it popped, and then it dropped immediately. Then it popped back up there. I didn't do it the second time because I got scared. And then it popped back down. And then obviously, the guidance came out after, and then it's up there at 126. But it's just what this market is right now. It's just been so easy on the short side. It's as easy on the short side as it was in 2020 on the long side. And that's why I think we're due for like a bounce here, but it's just not coming. I mean, there's so many stocks. It just seems too easy on the short side now. Like just doing dumb things. It's a dumb thing to just go and say, okay, technical resistance, I'm just going to short it at this level. It's one thing to sell out of a long, but it's kind of a dumb thing. And I didn't do it on a huge size. But still, it's just rewarding aggressive behavior on the short side. Like I was talking to another friend at Bright Trading. I always keep up with Bright Trading. They was like, you just short the pops. Just make money. Short.
Where did you try? I'm just curious. Where did
it's not going to continue to be this easy on the short.
No. We'll bring Mitch in here in a second. We got to rip through some earnings, but I'm just curious. Where did you put your order in, and where did you get filled? Like, did you try?
No, you get filled. There's no price improvement in this market anymore. You get your order. Very rarely will it trade through you. Yeah, Joel, and that doesn't happen anymore.
No, I'm just thinking it fell
everything
that fast.
is fragmented and it sweeps it all out. So whatever you put on your order, you rarely are going to get price improvement anymore. Yeah, we're not in the 90s. We're not in the 90s. We're not in the O's. This price improvement's dead. You get the odd like 1 cent when you're trying to lift an offer or something. But when you have your limit order out there, very seldom are you going to get better than your limit order. The algos are really good.
Well, I was just thinking, like, you hit it 125, it goes 124, 123. I mean, it logically, let's say you put out a 122 bid. If it moving that fast, I thought, within a minute.
Oh yeah,
it's
hit 122. So I threw it out there, but I had that number already in my head, and as it started coming up, I threw it out there on the way up. So I wasn't trying to get short on the way down. I threw it up on the way up, and I'm like, I think it stalls out at 125. Then went to 126, but then it's like I couldn't even see 126. It was so fast. I brought it up, and then I'm like, it's 125 offer, 124 offer. I'm like, well, I ain't going right back down. I'm going to go right above scratch. So I always go above, like when you're going 120. If you're thinking your number is 125, I like to price just below it, just in case somebody's purchased this size. Same thing, 120. I'm thinking the 120 to the 125. So I'm like, 120.15, I think I covered, or somewhere in there. I don't have it in front of me, but it was literally like almost 5 points in less than a minute. It was less than a minute.
That's wild.
And then I'm like, this is just an example of how easy it's been on the short side. And again, there's a lot of risk, but there's trades like this again and again and again. Just blindly, the trader by trading just keeps telling me, blindly selling the pops, blindly doing it is making all the money. And it's true. And that's why I think we're at a point here where we got to break some of these activities on the short side too, because now people are starting to catch on. Like, just sell the rip. I'll just sell the rip and I'll make money. That's why I think we're due for like a little mini squeeze here. I think we're due for like a little dead cat bounce. Not talking going in long-term portfolio and buying everything this is the bottom. Just saying that it can't continue to be this easy on the short side. And, they're hitting the generals now, but, under the, look under the hood yesterday. There was a lot of stocks.
Yeah, we talked about that. Yep. But let's bring Mitch in. We got a lot of earnings reports. We can dissect this stuff as it comes up. Good morning to you, Mitch. How you doing today?
Good morning, guys. It's been a crazy week, to say the least, right? Let's get to the action. Let's start it off.
This is a bigger conversation, though. I want to bring you in here on this conversation, too, because you're an active trader. You do obviously your live trading show here. How are you feeling like on the trading side of it? Like, I'm just feeling like it's been so easy on the short side that I think it's too easy, and I feel like we're due for like something like to squeeze some shorts and say, hey, stocks don't just go straight down.
I was in that game yesterday, and I paid the price for it.
Did you?
Yeah.
What were you shorting?
So no, I was actually going looking for a little bit of a tech turnaround, and I tried to play like the TQQQ a little bit on the day, right? And I was looking for some kind of run, and main stocks I was looking at also. I took a hit also in Microsoft as it was starting to come back.
But you were buying stocks.
Yes, I was trying to buy
so you're
the
on the
dip
opposite
a little
side.
Bit. But we were looking.
The buys aren't working at all.
Yeah, but we were talking about this even yesterday, Dennis. Even you included. We thought that
there was
maybe
a little
we would get
pop off the open, just
oversold
everybody in.
Yeah, it was a bull trap again.
Yeah.
We're getting these bull traps at the open where it goes up to a 15 or an hourly resistance, rejects that hourly resistance, and then smack down right after that. And that can catch a lot of the short-term traders, the ones in the 1 minutes, the 5 minutes, and even the 15-minute charts are going to be looking good, bullish. But if you go to the hourly, you might see bearish resistance there. And that's what I've been trying to avoid, going long into bearish resistance on hourly charts. Right now, that isn't working. All right.
So again, let's just talk and stick macro just here for a second.
Yeah, we can.
Because there's lots of commentary to think about. I mean, IWM is a major support. It did not go down yesterday. So as much as, we can say it was an awful day for stocks, there were some stocks that were holding up fairly well. There was some hope underneath all that demise because the S&P is controlled by 7 stocks. It's a very poor indicator for what the overall market is doing. The IWM was decent yesterday. The RSP was down, but not much. It was the Qs and the Magnificent 7 getting hammered. So it was classic rotation yesterday. So as much as CNBC was saying, what an awful day for stocks, half the stocks were up yesterday, maybe more. It was not that bad of a day for stocks yesterday.
What was different was the action in the TLT, right? Compared to the market, right?
That was good news.
The TLT going up and the market coming down. What do you guys think about that?
I don't think the market went down yesterday. I think the market was slightly up because my market is not those Magnificent 7. So the S&P, if you were using SPY, That's the, that's your market. That's the Magnificent Seven. It's how much is it in the Magnificent Seven, Joel? The percentages?
Well, I do the top 10, and it's over 30%.
It's over 30%.
Yeah, but that like the bottom 3 are probably less than 5% cumulative. So at least 25%.
So it's huge on those high end stocks. I mean, overall, we know stocks have had it pretty ugly. The broad market has not been good. The broad market was okay yesterday. It was actually okay. So I think underneath the hood here, the IWM did what it should do. It held up despite how ravaged, the big Magnificent Seven was. And, I'm not bullish the Magnificent Seven. I've been talking about the rotation, maybe going back the other way. Seller exhaustion in the IWM, seller exhaustion, some of these beaten down stocks that are down 50% in 2 months. And, they're hiding out in the Magnificent Seven. So they were hitting the hiding places yesterday. I think that could continue. Maybe Amazon stops it for a day. We'll find out. But there's lots of, things happening here and a lot of rotation yesterday. But I'm just saying yesterday wasn't as ugly as CNBC would lead you to believe.
I just pulled up the recent ratings, and I combined the Googs for simplicity's sake. And if you take all these stocks here, it's 27.5% of the index.
It's huge, and that's why the S&P is a poor indicator for what is happening in the overall market.
I agree.
And they try to reweight it a little bit there, and obviously that didn't really do anything. So, I mean, yesterday, what I'm saying is every stock just didn't get killed yesterday. There was a lot of stocks holding up well. So let's jump in. Let's jump in here, Mitch.
Let's do Amazon Q3 94 cents beats the 58-cent estimate. Revenues of 143.1 billion beat the 141.42 billion estimate. Q3 AW sales coming in at 23.1 billion, missing the 23.2 billion estimate. And this is where I see the negative in Amazon's report. As Microsoft earlier this week, Azur's revenue was jumping 29%, and Google had expanded 22%. AWS here, only 12%. Advertising, the positive on this report, 12.1 billion versus 11.6 billion on expected revenues. Amazon said that fourth quarter sales will include key holiday period, which will be between 160 billion to 167 billion. The expected revenue for that is at 166.6 billion. They did say that we had a strong third quarter as our cost to serve and speed to delivery in our store business took another step forward. Our AWS growth continued to stabilize and our advertising revenue grew robustly. So that's the positive here, the ad spending, the negative, the AWS comparison.
The report's fine, though. It was a decent report. I think a lot of people expected this after, a lot of people expected obviously something else because the stock's down $10 into the report. The issue here is, and again, my wife has this in her long-term account. The issue here is you're coming back up into this whole consolidation period, the 125 to 130, and it's going to get tougher to go higher from here. So we saw what happened with Microsoft. It holds up for a day and then gives it all back. So people are spooked right now. People are selling into reps. And I don't know if you break that mentality in one day. So it's difficult to come in and say, yeah, I'm going to buy it at 126 because I think it's going to 135. We're just not in 2020 anymore.
Short term today, you made a high at the 128 area, and there's three daily highs in that area. If you want to look a little bit longer term here, and I think you need to do it in this stock, is you've had a significant decline off the September high, right? And if that's a real low yesterday, whatever that low was at 1835, and this stock is still going to maintain its bullishness, then you got to get up to this 132.5 area. And the longer it takes to get up to this 132.5 area, I'm more of it like Microsoft. I mean, did that get punished the second day? Maybe they won't punish it today, but man, you gotta get up to this 132.5 area, put a couple highs in there, then pull back and build another base. So that's longer term setup here for Amazon.
That's the worst candle you can get at Microsoft. Has the good earnings and gives it back in one day plus some. Yeah, I mean that's bear market 101.
That's horrible.
Bear market 101.
Yeah, that's a horrible candle.
Let's get to the next tech. Intel Q3 adjusted EPS 41 cents versus 22-cent estimate. Revenues 14.2 billion versus 13.53 billion estimate. Intel sees Q4 adjusted EPS at 44 cents to 30-cent estimate. Revenues at 14.6 billion to 15.6 billion versus a 13.53 billion estimate. They did declare a dividend here of 12 cents, a little bit over 12 cents, 0.125, and stated on the earnings that we delivered a standout third quarter, underscored by the across-the-board progress on our process and product roadmaps, agreement with new foundry customers, and momentum as we bring AI everywhere.
Ooh,
this was said by Intel's
AI
CEO.
everywhere.
Oh, man.
The sentiment towards this stock had turned before obviously the entire market got destroyed back in September and October.
Yeah.
So you got huge support at 32. I actually had this looking at this at 32 and thought about buying it just ahead of the report just because it was sitting on such major support. Again, no, I'm just not in the buying mood. I got to eventually maybe get in the buying mood, but 32, huge support. What happens now is the same story as Amazon, though.
Yeah,
Cross
exactly.
back up into this whole consolidation area, and it gets thick in here. So it's hard to think that there's going to be follow through. And after Microsoft yesterday, I'm not buying anything up 7% on earnings.
Yeah, 2.5%. 7.5%, $2.5. 35, 39 is your pre-market high, but above that, you got a couple highs just over 36. I mean, that's a big area. I'd be surprised if it got up there today. If it does, that's that there's a double top here, right? At 30, let's call it 36.30. And you don't want to be a pattern guy. I own this stock, but that kind of looks like a head and shoulders, and this kind of looks like a head and shoulders. And
now you get a 7% pop when sell the rip is working better than any strategy out there.
Yeah.
And look at the comparison, right? Look at AMD's chart. That looks atrocious there on the recent breakdown through 100. It's tried that move plenty of times. It just can't do it.
NVIDIA did sneak under 400 yesterday. I mean, Dan Niles made a good point on CNBC. And if you are a believer that AI is going to change this world, I mean, NVIDIA is the play. And he made a call. He says,
what's that? What did he say? Too early.
Well, he said he made a call on the valuation. And he said, if you look at the forward earnings, this thing's only trading 26 times earnings now, if you look at the forward earnings. And it's growing earnings at 50%. So he was basically saying this is the only one that he wants to own of the Magnificent Seven. Because you know what? NVIDIA is still growing earnings better than anything out there. And if we are a true believer in AI, and I'm not sure, like I believe there's going to be, a difference. Is it the internet? If you believe that, you're probably buying this dip on NVIDIA because there's not a lot of other pure plays out there. So, I mean, and again, we saw it being very resilient even when, a lot of other stocks were selling off. So we've had a quiet little 15% sell-off here over the last 2 weeks in NVIDIA. It's a pretty substantial sell-off. So I think it's on your shopping list. It's a matter of like, how ugly does this market get? Because, still, and 26 times forward earnings, we're not saying current earnings, because if we look at the Benzinga Pro and bring it up, the current earnings are different. We know forward earnings are only projections. So if you go into a bear market or into a recession, those projections could come down quickly. The forward PE on NVIDIA is 97. So that's what scares people. But if you, or the current PE. But if you do look, Benzinga has the forward PE at 24 as well. So if they hit those forward numbers, believe it or not, NVIDIA is not super expensive here. If they hit those forward numbers.
One thing that I would point to, and I'll just bring up the Benzinga Pro for this, is look at that Wedbush price target and 600. I think the analysts are going to start coming out to try to defend NVIDIA on this downside action, as they're all caught in the wrong. I think that's what's coming out here.
I just pulled that up too, and I was just looking at it because I'm thinking, man, these guys got the last three guys came in and lowered after.
They started.
What about this guy from Key Bank? 750, man. Put down the pipe. I mean, come on. After this kind of run, and he lowered it. No, wait. The prior price started.
He raised it on the 3rd. He raised it. He raised it on October 3rd to 750 on Key Bank. I think these guys got it all wrong. And this tells me to get worried for that NVIDIA report, because if they miss anywhere near their guidance, I think this stock is back down through the next gap zone, which it's pretty significant. It'd be down there into the 370s towards like 318 space. There's a huge gap there.
It's all about, Mitch, whether they hit those forward earnings or not, though, whether they can hit those numbers. That's all that matters. The fundies do matter here now. It's still got the story, the NVIDIA story. Like, if you think AI is all a bubble, I mean, if you're of that opinion and AI is just, not going to be
that's not what I think though either, Dennis. It's just that we're early.
Well, what are you buying to play AI? That's what I want to know.
I don't think there's anything to play it right now. Maybe Adobe, but even then I'm hearing a lot of backlash against what they're doing. A lot of artists getting upset because it seems like AI is going to come in and take their job. At least that's what they're thinking.
28 times forward earnings. Adobe's more expensive than NVIDIA if they hit those forward numbers, believe it or not.
But at least I see those products working, right? At least I can tell you that I've used their AI features that Adobe has, and I can see people using it, making a lot of content from it. You can use, and the way that I look for this is I look at like YouTube and I look at content creators and what they're mentioning about AI. And they've mentioned a lot about Adobe's Firefly and different products that they have. NVIDIA is just going to be a matter of, do we finally see a slowdown in this demand for AI chips?
I think it's the bigger conversation here, and Christian maybe can come in here too, but all I'm arguing, I'm not saying, and people like to interpret, they read between the lines what I'm saying. It's like, oh yeah, Dennis likes NVIDIA all of a sudden. I'm making the argument of Dan Niles on this show. I haven't decided, but what I'm saying is NVIDIA, if they hit those forward numbers, is actually not as expensive as the world wants you to believe. That's all that Dan Niles was saying. That's all the Benzinga Pro is saying. I don't know if they hit those forward numbers. If I think we're going to a global recession, they probably don't. And then the stock maybe starts to get near 350 area, maybe 310 area. I tell you, if NVIDIA went to 310 though, it would be in my long-term portfolio. I will be buying it at 310 because there's no other pure play for AI.
Thing? What about the China
there's still
thing?
battles and chips.
You can worry about all this stuff, but at a certain point in time, you've got to buy some stock. So we can worry about everything. We've been worried about everything. I mean, and people hate it when I rant. Some people like it, some people don't. But we've been sitting here bearish on this show for 2 months. Absolutely correct. People are rubbing my face that I own AMD, which I sold half of, and that I own ALB. They're going to rub all that in my face because there's 10% of the people that absolutely hates my guts. So, but I know what? We've been right on this show to be bearish. Me and Money Mitch, Joel's been on the fence, but me and Money Mitch have been absolutely correct.
I just try and give a little levity to this show. I mean,
but we've been, honestly, we should be getting thank yous. For being, Mitch should be getting thank yous because he's been on the bearish side too, and he's been absolutely correct. Mitch, you have. I've been on the bearish side in the last month and a half. I've been preaching bear market for a month here. The market is down significantly from where we were talking bearish about it. So we have been correct on this. The question is, do we start nibbling back into some of these stocks that are going to drive? I think the next bull market is driven by NVIDIA, probably Adobe too. So we just had a 20% sell-off in NVIDIA, and it's come back down to a valuation that is half reasonable. Not 40 times anymore, but somewhat reasonable. So I'm just throwing it out there because Dan Niles brought it to my attention that I kept thinking NVIDIA was 40 times forward earnings. It's not anymore. It's 24 to 26. I don't know if they hit those projections, but it's a conversation to have.
I think that we can stop there with a conclusion that I think we both think that NVIDIA's report is going to be massively important for this market, regardless of which way it happens. I think that this might start the bear market. You think that this could start the bull market. So that just tells me how important this report is.
I don't know when the bull market is coming. And again, I've bought zero. So full disclosure, I bought 0 stocks in my long-term portfolio in the last month. 0, not one stock. The question is, I went from 55% to 60% cash in my long-term portfolio. You know why? Because those bloody stocks that I had, the 40% fell that much that my cash allocation's going more. If all the stocks go to 0, I'm 100% cash. So, I mean, we're raising cash by simply staying still because the stocks are going down. So I think let's just have this conversation. It's important, and earnings aren't that in ExxonMobil, whatever, who cares? But what stocks? Let's not try to time the next bull market. I just want to ask you a question. Which stocks are going to drive the next bull market? Because it's eventually going to come. If it's next year, it's 5 years from now. Which stocks? I'm asking you, Money Mitch, and I'm going to ask you, Joel, both of you. Name me 3 stocks that are going to drive the next bull market. Mine would be, and I'll get mine first, then we'll let you guys go. Mine would be Nvidia, for sure. I'm probably going to go with, probably one of the big mega caps, and it's probably going to be an Amazon, or maybe it's Microsoft, driving the next bull market. I'm not saying I'm buying those stocks here today. I'm just saying I think these are the next drivers. And then you could go off the board and like throw a smaller one in there or something. But, maybe you're going like I'm trying to think off the hop. Like you could throw an AMD in there too. I think chips are going to drive it. But my number one would be Nvidia. I think Nvidia is the no-brainer that is probably going to drive the next bull market. So at a certain point in time, you got to buy it.
All right, the chat's coming in.
I don't need to give 3 stocks. There's 2 comments I'm going to make. I don't know if we could. We got PC, Dennis, coming up at 8:30.
Yeah, well, quickly give us a stock. Give us one stock.
I'm going to give. Well, I have a lot of geopolitical concerns, and I'm not going to go into that right now. So I think that's standing in the way of a bull market. But I'm not going to give you a stock. I'm going to give you a name, and it's Jerome Powell, and it's the TLT. So that, rate.
That's a good call.
Yeah. So I'm not going to try and fight this market, when you still have rising interest rates. The recession camp is like the most ridiculous discussion when you get 5% GDP yesterday. So when I see a stabilization in rates,
then you better be buying stocks, Joel. If you think there's no recession 2024, if anybody out there is of the opinion that the recession talk is ridiculous and there's no recession 2024, you better go and buy stocks today. I'll say that.
I said that was a ridiculous number yesterday. The 5% GDP. There's no way that's going to be sustained. So I don't know where we at. Where are we at unemployment? I mean, is unemployment telling me about a recession?
You're making me bullish.
Okay. I'm just it's there. All the factors are there, and you got bombs flying over, geopolitical situations. So it's kind of hard to say, what stock's going to drive a bull market for the next 2-3 years when you got a lot of other things going on. So I'm keeping an eye on
I don't think it's hard at all. I'm not trying to time the bull market. I think it's Nvidia. I firmly believe with 100% conviction that Nvidia will be the stock that drives the next bull market. I don't know if it's going to be from 300 to 600 or what it is, but I think Nvidia will drive the next bull market. We do have PC. Mitch, do you want to try to get one in 20 seconds?
I would just say Amazon. That would never.
Amazon?
I would just trust on Amazon not destroying me, and so I'll stick with Amazon. I don't think it's not going anywhere soon, even if it does come down a little bit. This is the type of stock that I wouldn't mind having a true investment in approach. All right, let's get to the PCE and what we might get here. Of course, PCE price index year-over-year outlook in September, 3.4 is the consensus, prior being 3.5. Month-over-month at 0.3 versus the prior 0.4 report. Then we get into core PCE, month-over-month is expected to come in at 0.3, prior being 0.1. And the year-over-year outlook we'll definitely be watching as it's expected to come down 0.2 from prior being 3.9 going down to 3.7. Let's see what happens. You'll also get real personal consumption here to come in, personal income, and personal spending all at once. I always love how these come out at once. It's like, couldn't they like separate it by like 10 minutes? But hey, that's how they do it here. So get ready, team. Get wide.
Algo jumpers are out there. They're going both ways. They're going down. They're going up. But the important thing for me right now will be, and it's tight here, 41.73. I know it's only 4 handles away, but the way we've been zigging, zagging, that's halfway on the session. So we get a pop above 41.73, then I'll crack a smile if we hold it. If we take out that pre-market low at 60.75, you just got to realize we never saw the close yesterday. We were red the entire day. I don't know if this is going to be a day where we never see the close on the downside, but I wouldn't get too carried away on the short side if you go through that pre-market low. Survey says
Core PCE price index month over month at 0.3 versus 0.3 estimates. You guys see the red bars there. That's what you want to be paying attention to. 3.7 versus 3.7 estimate on the year over year core PCE. So prior was 3.8, 3.7. Wow. So we went down 0.1 there. So not going down much on the core PCE. Month over month at 0.4 versus 0.3. A spike there that doesn't include energy and food. Not looking good there, right?
I think the number that includes energy and food.
Just the overall right here, this top one right here.
Okay, so that does include energy and food.
Yeah,
that's the one that does.
Yeah. The core excludes. Excludes,
okay.
Right? Yeah. So here you guys see it right there at 0.4 versus 0.3. I'm gonna go looking into the report to see exactly why this is at 0.4. You guys talk about the price action.
Yeah, a little bit of a left. No knee-jerk reaction down, so that's good. And now you're recovering back. You're back halfway on the session here. So keep a little bid here at 41.73. That pre-market high of 41.85 means absolutely nothing to me. I think above yesterday's high was just above 4,200. So, settling it anywhere near 4,200 or 4190 area would just be, a major victory for the market, in my opinion. But you're getting a little bit of a lift. It looks up and continue to lift here, back over halfway on the session. So, Dennis, you never really left us there. Are you seeing much in the stock? The stocks were green before. So are they? Yeah.
Well, we gave most of it back, but now we're starting to lift on this number here again. I don't know. I've turned. You can tell that I'm trying to turn.
I love it, Dennis. I mean,
I'm trying to ring the register. And again, we've been absolutely correct on the short side here for the last 2 months. But I'm telling you, man, it's been too easy on the shorts. We're due for a bounce. And I'm not saying go all in here, but I'm saying that I think we're due for a bounce.
I think one of the things that I would
get sold.
To kind of add to what you're saying there, Dennis, is at least maybe the strong bullish leaning side is starting to slow down. Maybe it's not just all of a sudden the whip back, but at least opening new shorts right now, it might not be the best opportunity, especially the way that we are.
People are starting to turn a little bit here. And again, we still got a lot of bulls. Let's bring Christian on in this conversation here because Christian has a good feel for the market. He's a fantastic trader, and I want to bring him in here too. Because, I get a feel in there because I'm down in the ditches. I've always talked like I'm a good turn trader because I'm making hundreds of trades a day. So I can get a feel for where it's easy and where it's not. I'm telling you, it's been too easy on the short side in the last couple days. Too easy.
Let's get it going, guys. This is why you guys come to Pre-Market Prep. Hit the like button. Let's go.
Christian Fromhertz, the founder and CEO of Tribeca Trade Group. Now you get all three of us coming at you, Christian. Are you prepared? Are you prepared for that?
I am prepared. Good morning, guys. And I love the passion that you guys are bringing to this market. Every day you guys are having just a spirited conversation and a nice debate about what's going on in this market right now, because there's a lot going on, and there's a lot of points to bring up about what we're seeing in both like the macro and the micro with all these earnings reports coming out. So it's a very complicated market. It is not an easy market to trade too, which I think is very important too for your viewers to realize. And members of Tribeca Trade Group, I've been trying to reinforce that too. It's just, hey, you can kind of pump the brakes a little bit too, because it's a very messy market, and there's a lot of information that's coming at us on a day-to-day basis. With we just had another big inflation report. We also have a Fed meeting next week too, which is also going to be interesting. But yeah, we're getting so many earnings reports that are coming at us right now, and the dust hasn't really settled yet.
So Christian, let's talk about your indicators and what you look at in your trading, because obviously, we all look at different stuff. I've used the TLT for quite a while here as an indicator for trading IWM and some of the stocks that have a higher debt load. What do you use as indicators, and what are your indicators telling you here about, the market just looking out the next week?
Yeah, I mean, my number one indicator is price, and I do have indicators that I look at. Looking at volume at price, which gives me a sense of support and resistance and so forth. But price is number one. So what's going on in the indices? What's going on in individual names? That's the number one indicator for me. Number two, and then there's a few other things that I look at when we have a macro tape as we do right now. You guys have been hitting the nail on the head with, watching interest rates. I mean, that's something that I continuously watch. And, right now it's the volatility of interest rates too. The direction, of course, is important too, but we've just been seeing, the volatility really kind of move around. I watch the dollar and I watch, what's going on in like market breadth, so it's really important to me to see, a good landscape, a good investment landscape in terms of more names going up versus more names going down, which we don't have that right now. So that's why this market is kind of is difficult right now. Is you're just not getting that reinforcement, even though the market is dipping. You're not really seeing those institutions kind of come in, and we're not seeing that under the surface in terms of stronger dynamic to the market.
Better question. What is it going to take for this market to turn around? What is it going to take for the buyers to reemerge? Because right now we got a little bit of a buyer's strike across the board. I mean, IWM's making new 3-year lows, bounced yesterday just slightly, but now you got the Magnificent Seven starting to get hit. I mean, Nvidia's 100 points off of its highs. And Microsoft has a great earnings report. They hammer it the next day. Obviously, sellers are in complete control. How do the bulls get control back here?
The bulls get back in control when institutions start to buy, and we're seeing just a lot of distribution. I mean, I thought yesterday was a really interesting day because you guys were talking about, and I think a lot of people were starting to realize as the morning went on yesterday that, hey, like the breadth wasn't bad yesterday.
No.
And the bigger names were getting hit, which we're so used to it being the opposite way around, where the big 7 names are really kind of moving the market, but holding the market together. But there was just nasty performance by all those names yesterday, and of course it works both ways. When the market's moving up and those names are supportive, then the breadth hasn't been great. But it was the opposite of what we normally see yesterday, because those names were being sold yesterday. And I think after some of these earnings reports, where the bigger 7, or whatever you want to call them, I guess the Magnificent Seven, have been areas where people have been kind of like hiding out and been very complacent in. But the earnings is kind of shaking things up a little bit. That reversal in Meta yesterday, and what you guys already covered with Microsoft. I mean, Microsoft hasn't been able to. The one that had the good earnings sold off yesterday. So I just think that we're not there yet. I'm not a crystal ball type predictor. I just need to see things be a bit more consistent and a bit more stable. You don't want to see names that are up for a quick minute, then lose it all, in 5 minutes later. So, I think today watching, I think Amazon's going to be an interesting tell. Will that be able to hold the gains today? Because everything else, as you guys have alluded to, it's been sell the rip. Like anything that goes up. ServiceNow, I thought yesterday had a really good report yesterday, and that kind of just fizzled yesterday. So it didn't get hit, which is good, but it also, right on the open went up to 579 and then settled around, 550. So
gave it all back.
Yeah,
a lot of it back.
Yeah, and I think going forward into next week, because again, I don't think you have to kind of jump at this market right here. I think you want to see names that had really good quarters hold in there and begin to kind of lead the market. And that's one thing always with earnings season, is there should be some takeaways. Deckers had a good, I would like to see a Deckers hold in. Deckers is up to 536 now. If you zoom out, because that's what 50 points. But
that looks like a sell.
Oh God!
Yeah,
Why don't you show me that chart?
top of cycle, it looks like there. I have a great question
I
here.
get that one on. I'm gonna get that off my screen. Go ahead.
All right. Well, here's a good question here, and I'm going to combine it with a chat comment here because I always like to grab stuff from the chat. Douglas here is saying that it's been extremely difficult to trade lately, and I'll add to that with showing what you were talking about also, Christian, about the market breadth that we're seeing out there. Look at this right here. Stocks that are making new lows in the New York Stock Exchange, NASDAQ, and Amex. You can see there 1,002 versus only 47 making new highs, right?
Yeah, that's a good number, right? 1,000, so
1,002 stocks making new lows while only 47 are making new highs.
Yeah.
And then
And
you see
again,
the 50 and the 200,
right.
It doesn't look pretty there, right?
I would correct this though, and people chime in on this. Douglas, I would correct your statement. It's been extremely difficult to invest lately because I'll tell you right now, there's some traders absolutely killing it on the short side.
This is what I wanted to talk about a little bit, Dennis. Is
just killing it.
I wanted to ask Christian here, of course, being from Tribeca Trade Group, of course, you're in the battlegrounds every single day. What strategies are you seeing working right now? Is it the contrarian? Is it the momentum following? Of course, you don't have to give too much gold here. You guys might have to go to actual Tribeca Trade Group to find out. But what are you seeing out there that's working, Christian?
Cash is working great now. Listen,
man, 5.5%. I don't mind that in my long-term portfolio.
I mean, it's definitely, what's kind of interesting about this is, it depends what type of a trader you are. And, I listen to you guys just about every morning, and, selling the rip right now and doing a little bit of buying the dip is working. But the, if you're buying the dip, you've got to be really quick to kind of get out of that. And this is a scalper's market. So that's not my particular favorite type of market, but I've talked about how with the VIX over, like another indicator is like just looking at where the VIX is, because it tells you what volatility is, right? You don't need to chart the VIX or anything like that. Just know what it's telling you right now. And if we stick over 20, right, that stocks are moving very fast, and it's a scalping type market. While that's going on, it's a lot harder to hold positions, swing trade, which is my bread and butter, when the VIX is doing that. So if you're that type of a trader, if you're more of a swing trader, you just have to be patient and let things settle in. But for now, you kind of take what you can get, and you can definitely be, scalping to your heart's content, because, even look at yesterday, and I was listening to your closing print, Joel, yesterday, and the market bounced in the afternoon, and while you guys were talking, it was saying, hey, this is a constructive bounce, and then it was just started to bleed lower, and by the time you guys finished your thought, the market had given back almost all of the bounce. So it's just not a constructive, consistent market yet, but things could change very quickly. So that's where you kind of have to stay nimble, stay on your toes. And I think really, to try to finish answering your question, Mitch, is, to really just hold less positions right now, smaller positions, because when the VIX is moving like it, or volatility is moving like it is, you don't even need the same size position. So you can be a lot smaller because the market is moving faster.
Christian joins me every Tuesday on the closing print, and we broke his losing streak on Tuesdays, I believe, the last two ones. But Christian, one thing that I've heard you talk about, and it's been a core of your analysis, is like the 200-day moving average, right? Now that's like, for our show and for our people, I mean, that's like, that might as well be a decade trade. But how many stocks, besides the magnificent, like where's your base? Like how many, like we talked to Tim Quast, and his momentum filter 2 weeks in a row didn't have anything in it.
Yeah.
What's your pool? What are you looking at that stocks are trading above your 200-day that have constructive charts?
Well, I mean that's exactly what I'm seeing too, because I'm also, I have to say I'm a momentum trader too. So when I look at my scans and just not really seeing much come up, it just means that again, you have to be more patient, because even I like to go after relative strength, and I like to see rotations, which we saw a lot of rotation yesterday, but that's just one day, right? And you can't really get behind some things making an oversold bounce, which I think IWM did yesterday. But it's tough when you see names like cyber names acted well for about 2 minutes, right? I'm being dramatic, but they acted well for a couple days. You had CrowdStrike and Palo Alto act pretty well, but those names you can't overstay your welcome right now in this market, because it's just not that type of market. So yeah, I mean, these are things where I heard you guys just before I came on talking about putting together a list of areas or names that you want to get into, and a CrowdStrike and a Palo Alto is appealing to me. Once the volatility kind of settles in, and again, that might be more next week or the first couple of weeks of November, but these are areas that these are names that I want to see hold support after they're coming in. My big thing is always uptrends and looking for names that kind of pull back into support. So something like a Palo Alto really needs to kind of hold in here for me to be interested, because that name, just any strength right now, is getting hit.
I wanted to ask you, of course, Christian, since it seems like we're not going to turn you to the bullish camp, at least just yet. But what about maybe short opportunities in the market? Of course, I just put out a recent video on regional bank action, financials. I can see those continuing maybe on a downward path. Where do you see maybe some short opportunities?
Well, I mean, it could be, the last thing I like to do is short strength, but I think you have to look at that pattern in NVIDIA, which you talked about. I like to kind of own names that I think are quality, but from a technical setup, and I think everybody's looking at this one, that it could be a Head and Shoulders. So,
yeah.
I mean, if this thing breaks, and I wouldn't want to be swing trading shorts right now after this move. But if it can't get above, right where it's kind of trading pre-market 411 is something that I'm watching on my chart, on a short-term chart. But again, these are really short-term opportunities, short-term opportunities, because we've already fallen a decent amount. And we're also, you can't forget that we are entering a stronger seasonal period. So do I really want to be shorting after a decent clip down like this into stronger seasonality? Not necessarily, but I think while the market and the VIX is over 20, you do want to have some things that if they break support and they're a little bit overcrowded, that you can kind of, go after in terms of a day trade. So that's a great one. That's a great one to watch, that 411, 412 level.
Okay. All right. Christian Fromhertz. He's the founder and CEO of Tribeca Trade Group, joining us here with a good fundamental discussion. We love having you on, Christian. We'll dial you up
before he goes, I want his stock in the next bull market. I was asking everybody, don't know when the bull market is. We're not trying to time it. We're just trying to say, what is the one stock you would own when the next bull market? You were saying, but you gave us Palo Alto and CrowdStrike that you like short term, if they start to pull back. But one stock you'd like to own in your long-term portfolio for the next bull market. One stock. Only get one.
Only get one, huh? Oh boy. I'm watching, and I'll give you a technical level too, but I'm watching Tesla, and I want to see. Now Tesla had, I don't like it for the short term because their quarter was not good, and sometimes when a name has a rough quarter, they report a rough quarter, they're kind of like dead money until they have a better, either some type of fundamental news that comes out between the next earnings report or the actual earnings report themselves. But this level right here, this 205 level, and you could give it a little bit more room and I guess say 200. But if it breaks 200, then I would say get out of the way. But if it can firm up around this 200 level for the long term, I like Tesla.
Christian Fromhertz, founder and CEO of Tribeca Trade Group. Always good to have you. Always keeping up with you on Twitter. So if you don't have Christian, what are you guys waiting for? Definitely give him a follow. Have a great one, man. Take care.
Thanks, guys.
All right, let's get back to the market. How we looking, Joel? Still on the week?
Yeah, no. Constructive rally here.
Okay.
Yeah, yep. We're up 17.25 handles. We took that number, and we're right hanging mid-range on the session. I mean, today is such an important day for the market, and I don't like it. Like I don't want to see us up like 60, 70 handles, because those moves, they create pockets. I'd love to see us stay down here for a couple days, maybe a couple higher lows or something. But right now, the bulls are a little pesky and a lot of green
Pesky
on the
bulls.
screen here. So we'll see if we get some follow through.
It's nice that they're rallying on that number. It was basically an inline number.
Yep.
Even the one, like you were saying, a little bit on the hot side. And it's nice that, that they're trying to find a silver lining here. We're trying to rally on a number. It's nice that Amazon bounced back after reporting the decent report. They gave it all back. And then obviously the guidance on the call, that bounced back up. It's nice that Intel's holding up so far. I'm with you. Very important day. Got to hold these gains. Cannot go red today. Goes red. You're like, oh boy, here we go again. There will be some backing and filling. So it isn't going to be like straight up 60 handles if we were to go up 60 handles. It's going to be like up a bit, down a bit, up a bit, down a bit. You're going to get pullbacks. You don't have to chase in this market. But is there a point in time where maybe we put a little bit of cash to work to start nibbling on some stocks? I think some stocks are very oversold.
All right, let's get to some stocks here, guys. I'm going to try to quickly run us through some of these reports. Let's go forward here. Q3 adjusted EPS 39 cents, misses the 45-cent estimate. Revenues of 44 billion, beat the 41.2 billion estimate. They did, of course, pull back their guidance based on what's been going on in the strike. What do you guys think about forward?
I don't like it. I don't like Ford. It's oversold. Could it bounce? It could bounce, but the trade action yesterday, it got its bounce from the strike settlement. They gave it right back.
Yeah,
the earnings
wasn't
is
much
down.
of a bounce.
This is one that is on my bull market run because I think the market could rip higher and Ford could go nowhere. Value trap central here.
You're well off the pre-market low. This is a really big move for Ford. So until, we'll see what happens today. We'll zig and we'll zag, but we'll see if any, and he talked about institutions. We'll see if any institutions want to own this at 11, or, 10.60 to 11. We'll find out over the next couple days.
They already own it, Joel. The ones that want to own it. Nobody's jumping into Ford. I'd rather own Tesla than Ford.
Okay.
All right, Chipotle.
We'll see if the shorts want to bring it in at 11 then, okay?
Get your guac, guys. Chipotle adjusted EPS $11.36, beats the $10.55 estimate. Total revenues of $2.5 billion to $2.47 billion estimate. Comparable sales up 5%. Operating margin up from 15.1% now to 16%. And I was saying this yesterday on my show, Start Swing Trade, towards the end. I was like, I see Chipotle down here, but I wouldn't bet too much against their earnings reports because, man, they usually beat, at least from what I've seen in the last 10 quarters.
They usually always beat. Yeah. You should look back at the stats on that, Mitch, and hunt it down. I bet you it's a majority of it. I know it's a selective perception.
Yeah, I showed it. I feel
like they beat every time,
but it's kind of hard to bet against it.
Except when they poisoned a bunch of people.
Yeah, that's a decade ago and everybody's forgotten about it. Up 80 points. I don't buy stocks up 80 points in bear markets.
What about Capital One here? Capital One's Q3 adjusted EPS at $4.45, beat the $3.25 estimate. Sales of $9.37 billion, beat the $9.19 billion estimate. Net interest income really kind of helping them out here at $7.42 billion, increase from $7.11 billion in Q2.
Coming recession kills them next year. This is another one that I definitely don't want to own.
95 is a good level for today. 95 is your 5-day high, and you got a little easy beatsy. Well, not that big. So I look at this 95 to 95.59 potential resistance. You're getting a gap
trying to be
zone
bearish
there.
again with these stocks.
I know. Look at all these charts.
I'm trying to go bullish. Then we mentioned Capital One and Ford.
Don't worry, I'll make it better. I'll make it better. Let's go to the disaster stock.
Bullish on.
How's disaster stock and phase?
Oh my God!
Here you go.
So we talked about this on the closing print, and I said if they can do anything even remotely okay, the stock goes higher. Even just say anything okay. But I'm like, but I wouldn't put it past them. I also said this: because the bar is laying on the ground. I said I wouldn't put it past them to dig a hole to actually get under that bar. They cut the guidance in half.
Yeah, but don't you guys remember
How does it get worse?
SEDG already gave you the insight into this. They already had cut their guidance in half. So I think that betting on it to go up would have been not logical.
I didn't make a bet, but I was saying if they could say anything,
if you did take that bet.
And Mitch, this is exactly what we were commenting. I'm like, SEDG put the bar on the ground for Enphase. They simply had to walk over it. They didn't just
do it.
Dig under it. They dug a trench, and dug under the bar. That is one of the guidance was just absolutely atrocious. And it's telling me the financing issues here are real, folks. If you are buying companies that rely on their customers to obtain financing before buying the product, sell those stocks, because that's the ones that are getting hammered here. And those are the ones that will not turn around until interest rates actually start going lower. The Powell indicator, which Joel gave you earlier, is the indicator for all your solar, all your home builders, all the stuff that's high ticket, your automotives, all that stuff. It's the Powell indicator. You can't get bullish any of these things until the TLT starts to sustain a rally over 90.
You know what these stocks are acting like, and that it's a much bigger fundamental problem. And I don't want people to think I'm like a big climate change person, but is the sun? Are we losing the sun? I mean, are we not going to have sun anymore for solar stocks? I mean, that is the way these stocks are acting.
No, it's the interest rates. We all know what it is. It's the interest rates.
It is.
I don't know,
the customers can't afford the financing.
Yeah,
the customers cannot.
It used to be free, man, and now it's no longer free. Guess what? Well, I'm not going to put it on my roof.
There must not be as much sun. There must not be as much sun. I'll tell you.
It's simple.
You know what's going to need to happen here? The only way you save. So Dennis, sorry to interrupt, but I think the only way you save the solar industry is even more subsidies. Help them out even more so it can be bought. If that doesn't happen, these are going to, I feel, continue to come down, especially next year.
They need rates lower. It's the only way those stocks go up is if rates start coming down. Generac's in that category too. And I own Generac.
You know what?
Disaster. It's all interest rates.
Let's keep it more bearish. Let's go into an interesting stock that you caught, Dennis. FTI Consulting.
I've just turned from bullish to bearish again, Mitch. You just turned me.
FTI Consulting. Tell me a little bit about what this company does.
Oh boy.
Okay,
go ahead,
so
Dennis.
Here's one interesting. I keep typing in FTI because they should have the FTI.
Yeah,
ticker,
they should have the FTI ticker.
But FCN. So
yes.
FCN Consulting. So I want to reach out. I'm going to my Twitter account right now because somebody brought this to my attention. So I tweeted out last night that I believe there'll be hundreds of bankruptcies in 2024. Hundreds, like maybe even more than that. Like all these darling stocks, of 2020 that are trading for 30 cents, 40 cents, 50 cents now. A lot of these companies are indeed going to go bankrupt in 2024. So tweeting back at me he goes by XYZ on Twitter, at ADWZVD, said, check out FCN, FTI Consulting. And I'm like, oh my gosh, the consulting firm that would probably benefit and obviously would benefit in restructurings, in bankruptcies, and anything like that. The stock is making new all-time highs. It's like the market is smarter than I thought. I mean, they're getting ahead of it here. And I think on pullbacks here, a stock like this maybe does do pretty good because if you go to their website, they talk restructurings, they talk bankruptcies, they talk a lot of other stuff too. But FTI Consulting would actually benefit from hundreds of companies going bankrupt or potentially even more than that if you talk small businesses. So I was talking I think there might be hundreds of stocks going bankrupt next year, like traded stocks, like this one's insolvent, this one's insolvent. I mean, it's no doubt. Look at how many things are like 20 cents, 30 cents, and these were $20, $30, $40 stocks. A lot of these are going to go off the board. Maybe this is a company that benefits. And again, it just popped $20. So I think you got to wait for a pullback here now. But maybe you put this one on your shopping list to take advantage of all the bankruptcies that are coming in 2024.
Yeah, the zombie stocks, right? We still haven't seen those kind of leave, right? All that cash burning. They've stuck around for so long. Will they be able to stick around? Companies like, let's say, even Desktop Metals down at 94 cents. Stocks like that, those SPACs. They better hold on here. But we'll see what happens with that. As you can see, I went red light because it's kind of hard to have a blue light in this kind of show. Definitely need to have that red light on. It's 9 a.m., guys. Let's wrap up the market. What will you be watching on the levels, Joel? And then we'll go to a little final wrap up for Dennis.
Protecting that closing price from yesterday. Things are good. Yesterday we never went green. We barely got over the top of the low from yesterday, and there was a lot of red on the screen. So I'm hoping for an opposite day here. Hold in here at 41.73. Take out the pre-market high. Set our sights on 4,200. That's an optimistic view. If we turn around, we take out the pre-market low. I'm not getting real crazy on the short side. You have the closing price, and you also have yesterday's lows. So get ready for some chop and slop. And then on Monday, we'll do some more fundamental analysis talk with Jeremy Schwartz over at Wisdom Tree. So he can provide some wisdom to us. But folks, we got through another week here. So everyone be safe out there.
We're not through it yet.
Well, we're not through it yet.
We hope we're going to survive this week. I hope we close green today.
Okay.
TLT trading down 70 cents. That's not helping IWM, which is obviously just trying to hold green. Again, so I should correct, when we're using the TLT, the IWM is what is following the TLT, not so much the S&P, because some of those stocks don't care as much about the TLT. IWM, TLT linked at the hips right now.
Can we hold the Ackman low? I'll be watching it.
Big
I think we
question.
all will be watching it.
Oh,
right?
I didn't save that. I'll have to put that back on there. Okay, folks.
Have a good one, guys. I'll get Joel Elconin and Dennis Dick out of here. Going to get you guys over to live trading. That's coming up next. I hope you guys enjoyed it this week. I mean, we've been doing great coverage here, bringing good guests to bring you guys conversation on what we see out there. Like always, guys, you guys want to remember that this is all for, of course, informational purposes only, not to be used as investment advice, and opinions do not represent those of Benzinga. Hosts and guests may maintain positions in the securities discussed today. Like always, be safe out there, traders. It's not easy. And if you guys didn't catch it by any means, what are you guys waiting for to catch my video? I've heard so much great feedback, of course, on my video. So if you haven't checked it out, guys, go ahead and, of course, check out my video. You guys can find it right there on Benzinga. I'll try to go ahead and include it here in the chat here in just a second. But like always, the clock is ticking. Regional banks got a little bit of a bounce. I've tried to stay away from them and taking positions because I want you guys to be able to catch up with that conversation. So I'll catch you guys on live trading. We'll expand, of course, on will tech get a little bit of a bounce. We'll take a look at the action in the market. Can we find some kind of rally today? Find out, of course, on live trading. Smash the like, team. We'll see you guys over there. That starts up in just about a minute.